Most traders don't fail because they lack information. They fail because they cannot handle reality. The truth is cold, quiet, and utterly indifferent to what you believe you know. It doesn't matter what book you read, what strategy you copied, or what indicator you plastered on your chart. If you cannot control yourself when the market tests you, it will remove you without hesitation. No warnings, no mercy, no second chances. The market does not care who you are. It listens only to price and behavior. And the overwhelming majority of traders fail for one simple reason. They violate discipline and risk principles habitually, repeatedly, fatally. And when the final trade collapses on them, they act astonished. But the outcome was never uncertain. It was inevitable. Only the timing was unknown. I've watched fortunes appear and evaporate. I've built them and watched them vanish myself. The reasons never change. The patterns repeat. Traders enter with emotion and exit with regret. They chase noise, ignore structure, trust strangers, and deny the truth sitting directly in front of them. The tape gives them instructions. They do the opposite. This isn't a game of predictions. It's a business of execution. What you think does not matter. What you do is everything. And if you don't understand that, the market will teach you in the harshest way possible. Listen carefully. What follows won't soothe you. It will confront you. But if you refuse to face the reasons most traders fail, you will join them. So before we continue, subscribe, like, and comment. Your engagement helps others hear this message and lets me know this work matters. Every trader begins with excitement. They take their first trade, earn a small win, and suddenly feel unstoppable. It seems easy, too easy. A few dollars in, a few more out. They believe they've cracked the code. That first profit isn't a lesson, it's a trap. It rewards randomness and disguises it as skill. The most dangerous moment for any trader is when early luck masquerades as talent. That illusion is powerful. It creates overconfidence. Overconfidence creates recklessness. Traders size up too fast. They ignore structure. They assume that because something worked once, it will continue working. But the market owes nothing. It has no loyalty. It does not care about your previous success. It responds only to price. I made that mistake too. When I started winning in the early days, just like Seykota, I thought I had mastered the game. But beginner environments are a sandbox. When I stepped into real markets, everything changed. Execution was slower, spreads wider. My supposed edge evaporated. My capital disappeared faster than I ever imagined. Not because my idea was terrible, but because I didn't understand the market's intolerance for arrogance. Confidence without structure is just exposure. That's the part most traders never grasp. They think the goal is to be right. It isn't. The goal is to survive. The traders who last aren't the smartest. They're the most disciplined. They learn that small wins teach nothing, but painful losses, if studied, save fortunes. Early results don't matter. Only what you consistently do under pressure matters. And the test always comes. There is one mistake more expensive than all others combined. Holding a loser because you hope it turns around. That silent hesitation, the decision to wait just a little longer, has destroyed more trading accounts than any chart pattern in history. Losses begin small. A dip, a pullback, nothing alarming. Then comes hesitation. Instead of exiting, the trader watches. The price sinks further. They rationalize. They zoom out. They hunt for news. But deep down, they already know. They simply refuse to act. Hope replaces discipline. I've lived that moment. I once held a trade far beyond my stop. My excuses sounded intelligent market noise, temporary shakeout, misunderstood flow. But they were fiction. The result was fact. I lost more in that trade than I made in the 5 before it. Not because the market attacked me, but because I ignored my own rules. A small loss is a trade. A big loss is a failure of character. And the difference is measured in time. Every second of hesitation hands your capital to the market. The best traders aren't those who win the most. They're those who lose the least. They cut quickly. They cut cleanly. They cut without debate. Because they know this. If you cannot take a small loss, you will eventually take a catastrophic one. Most traders never build a system. They trade impulses, rumors, opinions, and instinct. They enter without rules. They exit based on fear. That isn't trading, it's guessing. And the market does not spare guesses. I learned early that instinct is unreliable. What feels right today will often look absurd tomorrow. But a system, one you've tested, refined, understood, is the only shield you have against market randomness. Without one, every trade becomes an emotional decision. And emotional decisions have no edge. There was a time when I jumped into any stock that moved. No plan, no logic, just adrenaline. Sometimes it worked, usually it didn't. But the real damage wasn't the losing trades, it was the inconsistency. Without rules, I couldn't measure progress. That's when I realized, without a system, you aren't a trader. You're a gambler with a chart. Your system doesn't need to be complex. It needs to be yours. It must tell you when to enter, where to exit, how much to risk, and when to stop. It must be repeatable, measurable, and emotionless. And above all, it must be followed. Emotions are silent destroyers. They whisper, they nudge, they convince you to wait, they make you ignore your stop, they make a good trade feel inadequate and a bad trade feel fixable. Fear freezes your hand, greed pushes it forward. Both ruin you. I've exited winning trades out of fear. I've held losing trades out of greed. Every time I ignored my rules, the result was worse than if I had simply followed the plan. Discipline isn't coldness. It's clarity. It's the ability to act while afraid, to follow rules while emotions scream. Not occasionally, every time. A strategy is only as strong as your ability to execute it without interference. Another misconception destroys traders: the belief that bigger size equals bigger success. Size is not strength. Size is risk. Risk is not measured in confidence. It is measured in how wrong you can be and survive. I never entered full size. I waited. I tested. I scaled in only when the market proved me right. If the trade confirmed, I built. If not, I backed off. That wasn't fear, it was protection. I've seen traders go all in on unconfirmed trades and panic at the first pullback. The trade wasn't invalid, their position was. They didn't lose because they were wrong. They lost because they bet too big, too fast. Overtrading is the same disease, jumping from trade to trade, not because opportunity exists, but because stillness feels uncomfortable. Action feels productive. But in trading, unfiltered action is expensive. The market doesn't pay you for activity, it pays you for accuracy. And accuracy requires patience. Some of my best trades came not from a high volume of activity, but from the discipline to wait, to sit on my hands, to ignore noise, to let conditions align. There's a difference between being active and being effective, and that difference is everything. There's no shortage of opinions in trading. Everyone has advice. Friends, social media, brokers, everyone wants to tell you what to do. But the market does not reward borrowed conviction. You can learn from others, but you cannot trade their beliefs. When you follow someone else's call, you abandon your own judgment. You stop analyzing, you stop planning, you stop being a trader. Every time I followed someone's tip, I traded badly, not because their idea was wrong, but because I didn't understand it. I wasn't trading the setup, I was trading the person. That always ends badly. I learned to trust one thing: the tape. It reveals pressure, exhaustion, aggression, and intent. No commentary needed, no predictions necessary. Every time I followed the tape, I traded with certainty. Every time I followed others, I traded with doubt. If you cannot trust your own decisions, you are not ready to risk money. If you rely on others, you're not trading, you're following. And followers don't survive. Traders love to repeat, cut losses short, let winners run. They nod, they preach it. Yet when pressure rises, they reverse the rule. Winners are cut early, losers are held endlessly, and they wonder why nothing changes. This rule is not a slogan, it is survival. Fear whispers to close winners early. Hope whispers to hold losers longer. Both sound reasonable. Both destroy accounts. When I obeyed this rule, my equity curve stabilized. My strong trades grew. My weak trades vanished fast. When I ignored it, the damage multiplied. A tiny win hid a massive loss that kept growing. And by the time I accepted reality, the cost was enormous. Traders don't fail because they never learned the rule. They fail because they never had the discipline to follow it. If you master just this cutting losses quickly and letting winners breathe, you immediately separate yourself from the majority. This is the dividing line. On one side are impulsive traders who guess, react, and regret. On the other side are disciplined traders who observe, act, and endure. The market offers both paths. Only one leads to survival. If you're still here, you've already done more than most. Most traders avoid the truth. They want shortcuts. They want secrets. But the real edge isn't hidden. It's just hard. And that's why it works. You've now heard the core behaviors that separate survivors from casualties. Cut losses decisively. Let profits expand. Trade with structure. Ignore noise. Act with discipline, not emotion. These aren't tips, they're principles, timeless, unforgiving. Break them, and the market will break you. Follow them, and you give yourself a chance. Most traders fail. You don't have to. Subscribe, like, and comment so others can find this truth, and so I know this work still matters. The market is not your enemy. Your habits are. Fix them, and the market becomes something different. Not a threat, but a mirror. And if what you put in is structure, patience, and discipline, what comes back may surprise you. Stay sharp, trade with reason, and never forget what you learned.